Welcome back. The SGX Nifty is still higher in trade, up close to about 100 odd points. Let's get that up for you on your screen. The rest of the Asian markets too are trending in the green right now. Market expert Dilip Bhat is with us on the show now. Dilip, morning, and thanks so much for joining in. Reliance is strengthening its dominant position now in the retail sector with the acquisition of Metro. Your thoughts on this particular deal and what it means for Reliance and the competitors in the space?
Good morning. I think this deal was very much in the offing, and it is very clear that with Jio as a background and Reliance Retail trying to consolidate their move very much in this particular space. And I think without any doubt, this deal is certainly very positive for Reliance, without any doubt, in the long run. But in the short run, how they transit to being a consumer-centric business house from being a B2B business house is what possibly remains a broad challenge in terms of understanding how they are going to fare. So I think, yes, for Reliance, it's one move further and further consolidation in this particular space. And I think with this, we continue to be quite positive on Reliance, without any doubt. But in the long run, how they will fare, that is what remains to be seen as they become a lot more consumer-centric.
Okay, that's on Reliance. Of course, we'll get you more details from an analyst in just a bit. Dilip, hi, good morning, and thanks for joining in. Greetings of the season to you. I wanted your thoughts on a sector like cement, because now there is a common narrative that cement is entering into a structural upcycle. One, of course, there's pre-election demand, but there is also pickup in manufacturing and real estate, and that perhaps will aid the cement sector both in terms of pricing and volumes. Your thoughts, and which are the cement names that you like for the long run?
Well, I think with the entry of Adani's in this particular business, I think they will make it much more proactive in terms of trying to consolidate the overall cement business within the industry. And well, I think cement, as far as the cement industry goes, it had been like capex cycle. You know, a lot has been spoken about the capex cycle and the demand for cement and the demand for because of the infra. Somehow or the other, for last couple of years, it has not really materialized on a very sustainable basis. And of course, we have seen the resultant impact on the cement prices. And of course, the cost has always been a very worrying factor for them. Hopefully, I think what we are going to see right now, probably in 23 and 24, the capex cycle really going up. And of course, the infra spend will continue to be one of the dominant features for this government as we move into the election year. So looking at that, cement industry possibly could just turn around right now, and possibly the EBITDA per ton, which is one of the key parameters which all of us watch, possibly could go northwards as the cost also become a lot more sober for them. So in that sense, I think the cement industry possibly can do pretty well in 23 and 24. So within the space, I think Ultratech continues to look pretty good and pretty interesting for us. I think that is one stock which one should really look at. And apart from that, I think I wouldn't really be too keen to look at ACC or Gujarat Ambuja at this particular stage, as they get into a very huge capex cycle, and maybe the dilution also will be huge. So within this space, let's focus on Ultratech and may possibly Ashuri Cement.
Dilip, any market intel in terms of what happened yesterday, the big sell-off that we saw? Any dominant driver to your mind?
In my opinion, I think too many moving parts. If you saw day before yesterday, Bank of Japan surprised everyone by their move. I think then the reports of the COVID-related pandemic also surfacing, and not to forget the fact that we are getting into a very uncharted territory, which is quantitative tightening. And this is not what all of us have experienced in the last maybe even 20, 25 years. And against a backdrop of an interest rate where possibly it appears that in full of calendar year 23, we are going to witness a very high interest rate.
Got it.
So there are too many moving parts, too many headwinds at the moment.
Just the
And
cumulative
against that
impact.
backdrop-
Just the cumulative impact, right? I mean, no one kind of trick. I was just wondering what many people were saying, this COVID or whatever, but I said, well, it seems more like an excuse to. But we've seen these large swings last 5 sessions. Dilip, another space which saw a very large sell-off is PSU banks. You know, I was just looking at it. PSU banks yesterday, high to low, lost 6. The index lost 6%. Aggressive sell-off. In the morning, they were all up 4, 5, 6%, and they closed at the low point, 6% off the highs. What's your prognosis here? Public sector banks, one of the strongest sectors of 2022. Is this a pause, and is momentum going to come back into the space? Go on.
Sure. I think the PSU banks, as we all know, have moved up quite a bit in the last 6 months. If I'm correct, the returns they have given in the last 6 months is much more than what they had given in the last 10 years. So that speaks a lot. So I think whenever you see that kind of a strong, euphoric kind of move, some kind of sobering down of the prices and possibly some of these corrections provide an opportunity. So I think as far as the PSU banks are concerned, on a longer term basis, next 1.5 years, they still have a reasonable steam to go ahead. So a correction can be looked upon as buying some of these banks for next 1.5, 2 years. But I'm not too sure whether I would be too keen to recommend these PSU banks from the current level, knowing the DNA of the banks don't really change overnight. And though they are starting on a very clean slate with cleaner NPAs and with higher NIMs and higher NIM and credit growth, all that, having said that, I still don't think I would be too comfortable recommending PSU banks on a broader basis. Maybe SBI, yes. Maybe Bank of Baroda, yes. But beyond that, one has to be extremely choosy and select.
Okay, well, thanks for that. I agree. PSU banks have had their fair share of a run-up as well, right? Almost doubling of prices in this year. So perhaps you want to be a bit cautious now. But stay on, Dilip. We'll come back to you. We were discussing Reliance Retail acquiring Metro AG's cash and carry business for 2850 crores. Now, Metro AG is a leading international food wholesaler which operates 31 large stores in India. The acquisition will further strengthen Reliance Retail's physical store footprint as it gets access to a wide network of Metro India stores in prime locations and a supplier network. Shirish Pardeshi, who's the FMCG analyst at Centrum, joins in now to talk about that. Shirish, good morning. What is your analysis of what this acquisition would bring to the table for Reliance Retail, and what kind of numbers do you see? What could the growth contribution be?
I think two things.